Okay, let's start. So, am I audible, guys? Am I audible? Okay, cool. So, today we are going to start a topic that is credit rating, internal and external. So, when we talk about credit rating, it can be one is internal, that is the credit underwriting, or you are rating a customer, or you are rating yourself. And something which is external also. So when we talk about external credit rating, obviously, I refer to the credit rating agencies and the kind of rating they give. Especially, we know there are many companies who are rated by rating companies like ICRA, CRISIL, Care Rating, and all. So this is a typical table of contents for today, where we will go and we will have a basic introduction of what is credit rating and what is the purpose, what are the benefits of credit rating. Yeah, no, Experian, Experian is basically a rating agency for rating an individual. So like CIBIL, Experian will give a score for individual and company. But when I talk about credit rating, so in fact, there are two sessions for credit rating, which we have kept. Today's first session and second session. And at the end of the second session, I'm going to show you a rating rationale as well. So where you get to know that how a rating rationale looks like and what are the findings. Yeah, correct, Praveen. It's Moody's, S&P and all. Correct, absolutely. So we'll show you how a rating rationale looks like and what are the conclusions the rating agencies arrive at after the rating activity, right? So, so we are going to discuss the purpose of credit rating, what are the benefits of credit rating, what are the role of credit rating. Coming to the credit rating agencies, major credit rating agencies who are operating credit rating methodologies and the credit rating criteria. And then I am going to discuss a flow chart about the overall process of credit rating, how a credit rating takes place. Now, what are the factors considered in credit rating? We are going to discuss the credit rating methodology in details, credit rating criteria, rating process, factors that affects the credit rating of a company in details. Then we'll talk or touch points like internal, external, rating description, rating agency versus credit information company, and a case study, right? So when we talk about credit rating, the meaning of credit rating is it evaluates the credit worthiness of a debtor, especially a business like a company or a government. Now you can say that the rating or Moody's has downgraded the rating of this company or that country even. So it keeps on happening based on the overall 360-degree observation of the company's or country's overall financial strength. So when we talk about a company, let us restrict to company first. Then we talk about the overall financial health, number one, overall sectoral performance in which the company is operational. And most important, last but not the least, is whatever term loans and the revolving facilities, short-term and the long-term loans the company has taken and how they have serviced it. So when we talk now, the first thing you can ask me is what is the difference between a CIBIL report? Even a CIBIL report, a corporate CIBIL report gives a rating or a score about a company, right? What is the score range for a corporate in CIBIL? Can anybody throw some light? 1 to 10, correct. 1 to 10. So when we talk about individual, it is 300 to 900. But when we talk about corporate, it is 1 to 10. Correct. Right. 1 to 4 is being good. And 1 to 3 is being probably more good. Yes, Yashwant. Right. So now what is the basic difference between a CIBIL report, a corporate CIBIL report, and a, what do you say, a credit rating? So now this is my question to all of you. So what is the basic difference between a corporate bureau, a bureau report for a corporate and a credit rating report for a corporate. How is it different? And why the underwriters look for both? It's a question. Correct, Kunal. So CIBIL looks more at timely repayment of outstanding payments, but it excludes the overall sectoral performance, overall company performance, and yes, correct. Credit rating looks at other factors. So even credit rating mentions the company's background, the promoter's background, in case there is a problem, there is something in the news which is also factored in. It is more comprehensive, correct, right? It is an evaluation made by a credit rating agency of the debtor's ability to pay back debt and the likelihood of default. Now, when we talk about likelihood of default, is it that the trend analysis of the past repayment is all which shows the likelihood of default, or there is something which is not visible, which is behind the screen? It's a question. Is it that the past repayment trend of a company gives me likelihood default, or there is something which is behind the screen which is not open to us? What is that, Amin? What is that which is behind the screen? I agree, but what is that? What are those things? Industry conditions, fair enough. Now, when you say, Bharat, the current situation of the company considers of what factors? One is financials, which is readily available. So that gives you the quantitative portion. Digital destruction threats, okay, very good. Order book scenarios, right? Future litigation charges, which we have seen for few, right? The ongoing business plan and the company performance will impact the ability to service debt in the future. Very good. Management practices, tangible and intangible assets, industry mergers and acquisitions, related parties suddenly increased in data. Very good point, Kamlesh. Management change, very important factor. Sovereign conditions like Russia, true. What about government policies? Correct, regulations by government. So there can be a news that suppose I have a company, political change, elections and change of satta. That affects new government, new setting, all these things affects. Now, tell me a situation, let me tell you that I have a company and I am operating in infrastructure sector. Government has all of a sudden, and my specialization, my forte is road construction. Now, government has all of a sudden declared that 5,000 crore investment will happen on the road sector for road development in infra. Do you think that kind of news will affect my credit rating as a company? Yes, it will, because that's an opportunity for me. Yes, Yashwant, there are multiple companies who had to stop. So Jindal had faced a lot of issues. I'm sure you people are aware of. Then IMTA from East India has faced a lot of issue. IMTA had literally closed down. Now they are probably starting. So Kamlesh, one portion you are correct. You are absolutely seems to be a very stringent credit manager. So you are absolutely correct. Now the point is here I have one thing to say. What is that one thing? That is, I get an order or I don't get an order is something definitely secondary, but it's an opportunity for me. Right. If there is an additional investment of 5,000 CR in infrastructure sector, then obviously that's going to be a great investment for me. You are right, Pravi. You are right, Pravi. So it is not that only that thing will directly, it will not directly impact. But now suppose what if I'm an NHAI contractor, National Highway Authority of India contractor, and I have bid for certain contracts, which is going to be where the execution process is going to be fastened because of this, this announcement of 5,000 crore infrastructure investment. Then in that case, correct. And suppose for an example, it can be a situation that up to a certain stage, road construction work is given and government announces, this is my new policy, I'm going to put additional 10,000 crore in the infrastructure sector, and especially in the Northeast. And I am a contractor who is working for National Highway project in Northeast. And I know there are few more orders which are going to come. It's a big opportunity for me. Government jobs gives less bad. That's true, but then government payments are much more secure. That's true, government. So in fact, if you talk about PAC, I can tell that I don't know anybody is from L&T is not that. L&T gives payment after 6 months. That too also depends from a project to project. In certain projects, they give payments in 30 days. In certain projects, they give payments in 8 months. And L&T, the rate they offer to the vendors is horrible. Is horrible. At a bare minimum profitability, they appoint vendors, where for the vendors, it becomes absolutely impossible to carry on business. And they will give payment after 8 months, 9 months. Correct. Okay. So then the second point is credit ratings are determined by credit rating agencies. The credit rating represents the credit rating agency's evaluation of, that is what we discussed, qualitative and quantitative information of a company, including non-public information obtained in the credit rating agency's analysis. Now, when I talk about non-public information, where do the credit rating companies get this non-public information from? Correct. Now, have you seen there are certain credit rating reports where the rating agencies say that the rating is sustained because company has refused to give information. At many times you will get a rating report that or rating is slightly downgraded because the company has refused to give information to the rating agencies. Not cooperating, correct. Not cooperating, Kunal. This is the perfect term. This is the perfect term. Not cooperating means not giving adequate reports. Not giving adequate reports, adequate data to the rating agency. No, actually, Bharat, what happens? They do not directly go for a non-cooperation. They will say, I will give data. I will give data. Fair enough. Sir, I will give data. Now they will drag it for another 6 months. See, what happens is that for the rating companies, yeah, they know, but when they do that, when they do that, they do that only when there is something wrong in their financials or their internal, aspect. Then only they don't want to disclose it, right? It is like, you have been given a summon and you have to appear in the court and your lawyer is saying that, so my lawyer is saying that I am sick, I am not being able to come down and appear in front of the court. So that is how it is. So it happens. Now, from the rating agency, see, theoretically, yes, they can highlight the name of those companies to RBI that they are not giving me the adequate information. And so my credit rating activity is getting affected. But think from business perspective, I have 20 odd clients. I am working with ICRA for an example, right? The moment I do that, I lose one or two clients. So one client is gone from my hand, and probably he knows 2, 3 other clients who is also gone. So in reality, in real life scenario, they start negotiating how much rating you will give. Give me an improved rating. This kind of things. So what they cannot do, Bharat? Yeah, the minimum information have to be given. I'm saying that. I'm not denying that. But I'm saying that what they do, they downgrade the rating. So automatically the rating got downgraded. Minimum information is to be given. But based on minimum information, again, if the rating agency thinks that certain information is needed, then those informations needs to be submitted to the rating agency. Otherwise, how they will conduct a credit rating for that company, right? So something which comes in public, no, they do not go ahead. Bharat, please try to understand my point. I am not saying that they will go ahead and give a good rating. See, it depends. Depends on how quickly you are getting information. It depends how quickly you are getting information. So normally I have seen companies publishing rating in September, October, and there are also companies who are publishing rating in the month of January, February. So post annual review, like post your financials are declared. Okay. Now let us discuss what are the purpose of credit rating. The purpose of credit rating is to provide an opinion or a rating on the credit risk associated with a particular entity or a financial instrument such as bonds or loans. So yesterday also we discussed when we were talking about the bonds, that bonds are also rated by the rating agencies. And when we don't know, suppose I'm a new investor, I don't know which bond is a correct or proper for me, I can at least blindly resort to the rating done for that particular bond. So credit rating are important for lenders, investors, and other market participants regarding lending money, investing in debt securities, and managing risk. So if you are talking, Anand, about Reliance, then which Reliance you are talking about? Are you talking about Mukesh Ambani or you are talking about Anil Ambani? Mukesh Ambani. I'm not very much aware of the current facts, honestly speaking. I've not done comparison, so I will not be able to say, but definitely I need to check and get back to you. Okay. The normal rating scale which we see is AAA. So we keep on saying it's a AAA rated bond, it's a AA rated bond, triple B kind of thing, and B is the worst. Like, so when we talk about AAA, it indicates lower credit risk. And when we talk about B, it is the highest chances of default, right? Okay, might be. Kunal. So now why it's a kind of auditor. So it acts like an auditor, an external unbiased organization or an external unbiased entity who observes the entire activity of the company and gives a holistic picture about how the company is performing. So because it is unbiased, theoretically, it is unbiased. So naturally, as an investor, you must or we must check the credit rating of a company before investing, be it in the form of debt or loan, be it in the form of equity also, be it in the form of giving loans, or be it investing in bonds. Now, there are certain benefits to the credit rating is required for collateral transfer, defining threshold, etc. during counterparty credit risk calculations. Right. So when we talk about credit rating benefits, so there are benefits to both the parties. One is to investors, another to company. Now, how it is beneficial for the investors? The first point is it helps in investment decision. As I told you that it is like an individual unbiased entity. So it gives the holistic picture of the company. So what do? We do not go and see the company's factory, the operations, probably the open source informations like company financials I can go through quickly. But whom do we trust? Who can tell me or who can guide me whether it's a right investment or not? Then obviously I will resort to the credit rating company. Again, why? Because it's a third party, unbiased entity. Just give me 1 minute, guys. I'll be back. So benefits of rating reviews also helps us to understand, to underwrite a company. That is one part. Third one is assurance of safety. Why rating reviews? Now, when we see the rating report, rating rationale or rating reviews are there. So how a rating company as a third person, a separate individual and separate unbiased entity is looking into the company, that entire review matters a lot. Second is assurance of safety, obviously. So it's a AAA rated bond, it's a AAA rated company. So that means it is a highly safe bet to invest, right? Fourth one is it's easy understandability of investment proposal. So now a proposal has come to me say for an company, for an airlines company who has come to me, who is fully operational for last 10 years and is going to purchase a couple of more Airbus, which will cost them few crores, and they want some additional fund in the form of debt. Now, what are the things I would take? I would take their financials. I would take their overall company profile, which is readily available in their website. I will take their entire MCA data where I like to see their charges and all these details. I will look at the Pro 42 report. I will look at their bank statement. I will look at their bureau reports. I will look at their, GSTR, IPE, whatever. Last but not the least, I will definitely look at the credit rating. Or in fact, before approaching that company, even if I am into investment banking or I am into fundraising activity, then before approaching that company, I know that company needs fund. The first thing which I will check is their credit rating. So normally as a credit underwriter, what I used to do before going to any corporate client or any private limited company whose information is readily available. So currently there are LLP and private limited company and limited company whose information is readily available in MCA. So Pro 42 is again a paid site. So you will not get that access unless you pay for it, right? So I used to first check what are the charges in MCA. Next is I used to check the credit rating. That is what I used to do as an underwriter. First, check the MCA charges, who are the directors, what is the authorized capital, and how much loan he has taken, how many have been satisfied, and how many is still open. And next is look at the credit rating. That's it. So that gives me a preliminary idea or a bird's eye view about the company. Then I decide, fair enough, let us go and meet the promoters. All right. Next is understanding the investment proposal. So how do you understand the investment proposal? That right now, currently, I told you something that there is a company who is into aviation, and they want to purchase a couple of Airbus. Now, how a credit rating will tell you whether to go ahead or not. How a credit rating report will tell you. They can tell you that whether the company is able to repay their debt properly or not. Now, what happens when they are not able to repay the debt properly? Well, credit rating might not give you an idea about the future cash flows, but yes, it can give a trend about overall company's performance, that they are repaying good. That means their operational efficiency is good. And if the operational efficiency is good, plus, yes, one way you are correct, Anand, what you have said, ability to pay, yes, correct. But to some extent from the credit report, you get to know how the sector is growing. So if I know from many open sources, not only from credit report, that yes, aviation sector is having a CAGR of this, and for the next 5 years, it's going to grow like this. And this company is having this much amount of market share. Their debt repayment ability is this much. Their financials are strong. Their ratios are strong. So that means probably funding 2 Airbus makes sense, which is not an aggressive call. Or even if it is slightly aggressive, then I have to look what are the mitigants are there. If there is adequate mitigants, then obviously I can go ahead. Or else I will ask for additional collateral. I'll either reduce the funding amount, and I will start creating charge on any kind of assets which they own and free from encumbrance, and then go ahead for funding. Go Air is one who is looking for funds. So one is Go Air, another is SpiceJet. Even SpiceJet is looking for fund. SpiceJet is looking for fund. Initially, they were looking for fund from the company. And then their director wants around 200 crores pledging the shares of SpiceJet. Now, has anybody looked at the share price? You can go to Money Control and have a look on the share price of SpiceJet. What kind of movement is there? So when I have seen, probably I have seen it a month back, when an investment banker, he told me that they are looking for 200 CR. So it was not that great. The picture in the Money Control, which I got to see, is not that great. Okay. Next is choice of instruments. So you choose an instrument based on the credit rating. That whether to say that you have option 1, option 2. Option 1 is AAA rated and option 2 is BB rated. So obviously we'll choose AAA rated. Now that again, correct, Yashwat. So that's what I told, that I have seen it a month back and the picture was not that great. Right. So now what is the guarantee? Even if he takes 200 pledging his own shares, and those shares are SpiceJet shares only, if there is a tremendous fall in the shares, then what is that? He is not ready to give any kind of additional collateral. He needs 200 CR. That's it. Correct. So yeah, the 5th point is choice of instrument. And the 6th point is it saves investors' times and effort. So you don't need to go through a thorough research. So that overall financial research, overall sectoral research, you simply go to the credit rating, see, because when you see a good credit rating, you assume that all the research in the back end is already done by qualified analysts. And you have seen that in the rating rational also rating report, you get to know the analyst number also. So in case you have any doubt, several times I have done that. I have called up that analyst and got to know the details. And they generally they give not the intricacies, not too much details, but how do you feel? I have seen that you have given a good rating. How do you personally feel? Then he or she will tell you that yes, fair enough, I have not seen anything bad. Or even if there is a red flag, they will tell you yes, there is a red flag. Right? For the company, how it is beneficial, as we had discussed, that if I am an individual, I am having a good CIBIL score or a good experience score, I have high chances of getting loan. Right? Similarly, it improves corporate image when I have a good credit rating. It lowers my cost of borrowing. So it's naturally, if I have a bad credit rating as an individual, I will go to Shriram Transport Finance to take a car loan at 18%, 20%, 25% rate of interest. If I have a score of 800 in CIBIL and there is no overdue, no DPD, no write-off, then obviously I can take a loan from HDFC at 9%. Similar thing for the corporate. If a corporate is rated AAA, then obviously their cost of borrowing will be less. They can get borrowing from the banks. Whereas if the same thing is downgraded, then they have to go to NBFC and their cost of borrowing will be high. And even in NBFC, probably the same NBFC is giving at 12% to a company with a good rating. When a company with a bad rating will come, they will also want to mitigate their risk, and for which the borrowing cost will be increased. Right? Third most important point is, when I have a good rating, when you have a good rating, you have a wider audience for borrowing, right? You can go to whom? Bank of America. You can go to Standard Chartered. You can go to HSBC. You can go to ICICI, HDFC, and also obviously the NBFC All the NBFCs are open for you. Fourth important point is good for non-popular companies. What is meant by this? Question to the house. What is meant by this? Good for non-popular companies. Correct. So one is unlisted company. Another is the companies who are not so well known in the market. Yeah, I can say a brick and mortar industry. Or even a bootstrap company. So Yashwant, partnership, proprietorship companies, I have rarely seen they get it rated. It's not that they can get them rated, but what happens is that normally beyond the threshold limit of turnover and business activity, they convert the company to private limited company because private limited company has a lot of benefits and also it is more transparent. Like you get to know the details about their promoters, the charge creation, all those things, even the signatory details when you check MCA. But for a normal partnership, I'm not talking about LLP, that is limited liability partnership. These things are not available in the open source. So what happens, say, suppose you start with a partnership company and you cross a turnover of say 20 CR, 30 CR, 50 CR. Normally it's a train which I have seen. They convert it into a private limited company. Because rating and all these things, people are slightly in India, people are slightly more conservative that why to spend money on rating when my business is not that great. So once they scale up the business to a level and then only they go for rating. Now, once they scale up the business up to a level, by that time, they become a private limited company. Normally, this is a normal trend which I have seen. There might be different opinion as well. So still today, people are slightly skeptical about getting ratings done because why to spend money, why this, why that, what is the need and all these things, right? Okay. Wider audience for borrowing, yes, good for non-popular company and act as a marketing tool. Now, obviously, when you have a very good rating and you approach to your clients, you are more credible to them. That yes, this company is operational for last 10 years and this company has a good rating. This company has a good rating. Next is it helps in growth and expansion. Now, when we talk about growth and expansion, what does it mean? What does it mean by how a good rating can help you grow your business? Can someone throw some light on this? Less cost of funds, more profits. You can raise funds cheaper, which can be used for expansion. Very good point, Praveen. Correct. Credit availability, right? More vendors will come in, right? Next. Next one is improved credit cycle, good. Better negotiations, brand elevation, because we said that it will help in marketing also. Investors looking for this kind of customers, right? So I'll tell you one instance. Last month in May 5th, 16th, 17th, 18th, there was a fintech fest which took place in Mumbai. I don't know how many of you are aware of this. It took place in Reliance Jio World Center in BKC. And around 250 odd companies who came. There are startups, there are slightly, stable companies, some are startups. And most of these companies are fintechs and AI companies. They are either someone has made some chatbot, someone has made some application, someone is serving the BFSI with their LOS, LMS journey, right? And someone is providing alternate data analysis. Even ICRA stall was there, CRISIL stall was there, right? So a lot of bankers came, not as a, not for giving a stall or displaying their product, but they were going on a stall to stall, understanding whether there is any requirement for finance and investment. Even a couple of private equity players came there. They visited every stall, even they came to our stall, asking whether you need any investment. What was your credit rating? They wanted to understand. So initially they posed as a customer, wanted to understand what the companies are doing. They asked us that what you are doing. When we explained all these products, they have shown their interest, and they asked whether are you looking for any investment in terms of equity, and the bankers who came in terms of debt. So these are the things which happens when you have a good rating. You get a better chance people approach you for funding. And Anand, this is also very true. That is FII, that is foreign institution and investment, that also flows. Correct. Faster fund availability. Absolutely. So that is very important point, Praveen. So fastness in the fund availability is very important. So right now you have a contract in hand which you need to execute, and you need fund for that. And because my company is not having a great credit rating, the fund approval got delayed. By the time the fund got approved, the contract is out of my hand. It has happened to many parties I have seen. It is very, very important to maintain a good credit rating. Okay, Anand. Okay, let's go next. These are some companies: CRISIL, ICRA, Care Ratings, India Ratings and Research. Okay, when we talk about, credit rating agencies, then these are the normal 4 rating agencies which we talk about: Care, ICRA, CRISIL, and India Ratings. Some key roles of credit rating agencies. So what they do, right? One is credit assessment. Second is credit ratings. Third is risk mitigation. Fourth is market transparency. Fifth is regulatory compliance. And sixth is investor confidence. So when we talk about credit assessment, the primary role of credit rating agencies is to assess the credit worthiness of the individuals or companies or government even. They evaluate various factors such as financial statement, historical performance, industry strength, economic conditions to determine the credit worthiness and likelihood of default. So one thing is very important, that is economic condition. And what happens when there is an upcoming war? The credit rating for a country will get downgraded. Even the companies, those are operational, that will get downgraded. If there is an upcoming election in a country, the companies which are operating in that country or rather headquartered in that country will slightly face the hit, right? Next is based on all the informations taken, they will do a credit rating, right? Now, as a company, what are the financial instrument you can have? What are the typical financial instrument which you can have on which you want to get rated? Right. I can have bonds, I can have NCD, deposits, commercial papers, short-term and long-term bond. Very good. So, perpetual debt. Okay. Bank facilities, cash credit, revolving credit facilities and all. So that's a very good question. Whether the defense sector companies, the companies we are serving to the defense sector is going to get affected. So if they are getting heavy order from the defense, what will happen? Tell me. So what will happen if the company during war gets huge order for manufacturing ammunitions? Then obviously for that company, it's a very good time. It's a heyday for them. So that is what Bharat, I told you, that in case the company gets an order, there is huge cash flow, then there is a heyday. Please listen to what I'm saying. Now there was pandemic, right? There was pandemic throughout the world. What about the companies who has so then again, it depends on a company to company. Yes, Anand, that is what I'm saying. It was a boom for pharma companies and especially those companies who are manufacturing antivirals, antibiotics, antivirals, vitamins. For them, it was a boom. For the companies who was, making this vaccine, it was a boom, right? Dolo 650 made 400 crores. See, Dolo was a hot selling product at that time during Corona. So the next one is risk mitigation. How do they mitigate risk? Because they give investors a holistic picture of the company. So naturally, you mitigate the risk. So suppose there is a situation where there is a request for a loan on a project for say 95%. As per your credit policy, you cannot go beyond 90%. But you have a good credit rating. The company is having a good credit rating. Can you take it as a mitigate for additional 5%? Can you take it as a mitigate for additional 5%? Yes, you can. Correct, Praveen. You can. That, yeah, I understand that I am going beyond the threshold limit, but why I am going beyond? Because the company has got a good background, a good credential. And it is being validated by an unbiased entity, a credit rating agency. Next is market and transparency. What do we mean by market transparency? What do we mean by market transparency? When we talk about market transparency, what do we mean by market transparency? Correct. They provide data about the company to the public. So practically, we will see a rating rationale today in the second session, in the next session. Across the sector average, corporate governance, yes. Like apple to apple comparison between two companies since rating follows standardized approach. Yes, Praveen, obviously, I cannot compare an infra company with an FMCG company. Yeah, act like an umpire. Even act like an auditor. It acts like an auditor, carefully observes everything and give a report. Now, the next important point is regulatory compliance. So when I talk about regulatory compliance, normally who are the regulatory bodies? Who are the regulatory bodies when I talk about regulatory compliance? SEBI, RBI, SEBI and RBI. So IRDA comes for an insurance company. Correct, Fed. So normally, SEBI, RBI, these are the two things. Sector to sector, obviously, it depends to sector to sector. Right? So there are certain regulations, rules and regulations laid down by those regulating authorities, and rating agencies ensure that the compliance is there. So they help in regulatory compliance. Correct. Correct, Amit. Okay. Next, last but not the least is investors' confidence. As we have discussed it multiple times that for an investor, we cannot go and check each and everything. So probably you see the share price for last 6 months, right? But if it is not listed, then you can only check MCA and probe report. That's it. And you can see bureau report. Can you ask bureau report before investing? If you as an investor, we are a retail investor, suppose we want to invest in a bond, right? If it is a bond is coming from a reputed company, you get a lot of things in the open source. But if you want to invest or you are a credit underwriter, invest, you want to, like you have to underwrite a case of a private limited company who is not listed, whose details are very limited details are available in open forum, then at least you can rely on the credit rating report. That's why credit rating is important, right? These are some international rating agencies. Next is credit rating methodologies, are frameworks used by companies, used by credit rating agencies to assess the credit worthiness of entities such as corporations, governments, or securities. Now, these methodologies provide a systematic approach to evaluating the credit risk associated with an entity or financial instrument. So this is something which we had already discussed, that they do credit rating to ensure the proper credit worthiness is there. Now, this is a diagrammatic representation of the credit methodology. Rating methodologies evaluation of the following criteria. What are the criteria they take care of? Business risk, financial risk, management risk, and business environment risk. Now, when we talk about business risk, the first risk which comes into the picture is strategic risk. What are the different strategic risks? Question to you all. What are strategic risks? What are strategic risks? Sales getting into areas which is unknown, right? Getting into a segment which is risky or less lucrative. Very true. Good one. When to expand or grow, when to be conservative, right? Whether the right decision is taken. Business model risk. Okay, very good. Risk association, getting into it. Very good. Right. Right. Those are normally strategic risks. What could be the other important strategic risk which can affect the company? Mergers and acquisitions. You have invested, you have acquired a company which is tremendously loss making with an anticipation that it will flourish. And a lot of cash outflow has no. Natural disaster cannot be a strategic risk. It cannot be a strategic risk. It is something out of your control. You have not made a strategy for which a natural disaster has happened. It can't be a strategic risk. So, Anand, you are talking about biting more than one can chew means probably the company has made some investments by raising debt, which is beyond its capacity, but it has gone wrong. Could be. That could be one. Right? Suzlon, yes. Now the next risk is compliance risk. When I talk about compliance risk, what are the compliance risks? What are the compliance risks? What are the compliance risks? Correct. Business with comply with covenants. Capital adequacy, right? Solvency. Solvency will not be a compliance risk unless it is mandated by some regulatory authority. Sterlite an example, right? Pollution effluents. So regarding this, I'd like to give a small example. In eastern part of India, there are a lot of brick fields, right? And there are particular area where a lot of brick fields are operational. Now, there is a pollution act which has come up and which specifies the height of chimney. You have seen brick field, right? There is a certain height of the chimney which is required. Most of the brick field, they don't maintain it and they are unauthorized brick field. So it, like in most of the places, people have bought an open area, started digging mud and started making brick. That has happened in Eastern India in specific few areas. Now what is happening? Now because of these risks, funding, any kind of funding to this unauthorized brick field has become risky. How it has become risky, I'll tell you. They have to give a lot of money to police and local politicians just to safeguard them, which is actually eating out their profitability. Okay, Anand. Right? So this could be one important thing where compliance risk comes into the picture. Next, before you fund any company, you check whether they have filed their GST return properly or not, because it's a under compliance. Whether they have filed the IT return in time or not, because it comes under compliance. Will you ever fund a company who has not filed ITR for last 2 years and have been paying penalty, or they are habitual penalty payer? Certainly not. That means they are not compliant. Even employees due, even PF, Provident Fund. There are companies who makes delay in making payment to the Provident Fund. That can also be tracked when you underwrite a company, that whether a company is paying PF properly or not. Right? The next important factor is operational risk. Now, when I talk about operational risk, what are the typical operational risk? Yes, Bharat, employees dues. Now, what are the typical operational risks that comes into the picture? What are the typical operational risks that comes into the picture? What are different operational risks that can affect your rating? Natural disaster can be a risk, but it also depends how you have a BCP, that is business continuity process. So there can be a natural disaster. Suppose I have, yes, a chemical plant fire. So recently, few months back, I think in the month of January, 1st of January, 1st of January, yes, 1st of January, there was a tremendous accident in a plant in Nashik. I don't know how many of you are available. I was coming back from Nashik. I took that video. It was a tremendous accident. A lot of people died. So theft employee, yeah. So theft fumes of cloud, right? So theft, employees misconduct, and all these things are there. Now, when I talk about operational inefficiency, I talk about wastage and pilferage. I talk about idle time. That means a lot of idle time is wasted, which is not perfectly identified. Probably productivity can be improved. Now, when I talk about raw materials, I talk about logistics as well. That process optimization plays an extremely important role. I talk about resource optimization, that how you are effectively using a resource. If required, let him do multitasking, multi-department reporting. That kind of thing is operational efficiency. And if a company is maintaining properly, makes sense. So when I talk about ISO 27001 certificate, it also takes care of the holistic view of the entire company, not only in the terms of quality, but how the quality is being maintained, right? So if you see there is a company who has appointed a management consultant who can give you the entire picture about how their operational efficiency has improved for the last 3 years. Okay, and how the idle time is reduced by only doing process optimization. That means the company is going in a right direction. And along with that, obviously, as a credit rate underwriter, when you have to give rating, it obviously makes a good sense for you, right? Next one is reputational risk. When I talk about reputational risk, what do I mean? What is meant by reputational risk? Frauds, true. Next, what else? Product quality and market feedback. Correct. No. Do you think that companies like Facebook, Meta has a reputational risk? Companies like Facebook, Meta, no, not when the server is down. Server can be down. Even IT companies, they do not, guarantee 100% uptime for the server. They commit around 97 to 98%. That's it. Data privacy, how can it be a reputational risk? Yes, there can be reputational risk if you are handling very much important data and that leaks out in the market. If that leaks out in the market and that comes up in the news, then obviously that affects your reputation. That shows that you don't have proper security. Right? The next important, right. So the next important part is financial risk. So in financial risk, the first risk is counterparty risk, so all these risks are considered by rating companies. So when I talk about counterparty risk, what does it mean? What can be a practical counterparty risk? So what can be a counterparty risk? Default is fair enough, but then correct. Suppliers not giving raw materials, not stock, raw materials. Correct. Inferior material, I don't know whether it will come in counterparty risk or not. Debtors not paying, true. Now, when the debtors are not paying and there is a counterparty risk, how it is going to affect my financials? Cash flow and enhanced working capital cycle. So one is definitely it's going to affect directly going to affect my cash flow, for which, yeah, bad debts written off and my profitability gets reduced. So one is increase in my working capital cycle. Next is if there is a bad debt, then obviously then write-off. Write-off means I'm taking a hit on my PL account and naturally my profitability comes down, right? Now, how a political risk, what kind of political risk can affect my financial risk? The next one is political risk. So how it can be a financial risk for political risk? How a political risk can be affecting my financial stability? Right? Absolutely. Good. Absolutely correct. Next is currency risk. How that can affect me? Financially, how that can affect me? Currency risk. Correct. How do I mitigate currency risk? Right, by hedging. Yeah, so it can be depreciation of the currency and appreciation of the currency. Both way it can affect businessmen. Now, whether it depends whether you are an exporter or you are an importer. Now, whether you are directly into export or you are depending on goods that are exported or imported. Right? So the next risk is management evaluation. So when I talk about management evaluation, it is evaluation of the management discussion and analysis report of the board of directors. How it is going to get affected? How this is going to get affected? how board of directors analysis is going to get affected. Policy, leadership, and market contact, correct. We'll give insights into the thought process, reputation of the director, right. So not recently, say around a couple of years back, if I remember, there was a reputed infra company in North India whose director has murdered an employee. I don't know how many of you are aware. I'll desperately not name that company. Whose director had murdered an employee, right? And almost all the financiers decided to stop funding for the time. That guy was sent to jail. Now, this is the reputation which the company was blamed for this. Now, being a director of a company, if I am doing anything wrong and that comes into the news, even if I am doing something wrong in my, personal capacity, like Ashnur Grover has said something wrong to the HDFC guy, and that become a big news when he was with Bharat Pay, right? Ashnir has said something wrong to the HDFC guy, and it become a big news when he was with Bharat Pay, right? So that is the thing. Kotak, yeah, sorry. It's elaborately mentioned in that book, Doglapan. That book, Doglapan, he has also stated why he has used that kind of word. So it was like, so it was basically, he was supposed to get a fund for an investment in equity market, yeah, IPO funding, right, which he did not get in time. And that is the reason he has used something abusive, some unparliamentary words. But again, he was a director of Bharat Pay at that time. So it became a news. So the same thing can happen with any company and any promoters. Right. So now you say greed and anger or whatever, but he was a successful guy who had, like. So Anand, I said that you can find me as. So this is the one, like, if you search it, this name, the uniqueness of the name is I have two H, ABHHIJIT. ABHHIJIT. Okay. So, but anyway, you talk it about your. I didn't get your question on. So, you talk about greed or anger, but he was aggressive guy. And he has taken Bharat Pay to a new high, obviously. Anyway, the next one is business and environment analysis, evaluation of the external factor of the issuer's business environment. So what are the external factors, out of which there is one important thing which is nowadays coming into the picture, that is CSR. So what are the social responsibility when the company is doing, and how in the environment the company is being perceived. So this is the overall, factors which a credit rating company considers before giving a rating. Now, while rating agencies may have their own proprietary methodologies, the general principle of factors considered in credit rating methodologies includes financial ratio and metrics, industry and competitive analysis, business and operating risk, governance and management. So these are things which we have already discussed. Now, only one part is industry and competitive analysis. When I talk about that, so we all know financial ratio metrics, we all know business and operating risk, which we have discussed, governance and management also we have discussed. Now, when we talk about industry and competitive analysis, what do I want to say? And how that kind of analysis is to be done? So first of all, it is EBITDA. Now, when I talk about EBITDA, and I am talking about industry and competitive analysis, correct? That is one portion. Second, anybody else? Bharat is right. Comparing various ratios with respect to the industries. So there is something called National Industries Corporation. So there is a handbook. This is quite old, where there are different codes for different industry, which is followed across the banks, especially who are into MSME or SME lending. Now you get the entire sector, right? You get which sector has which code. And if you do a bit of deep dive and Google, then obviously you will be able to see how the overall market is performing. Now, how the sector-wise CAGR is. Now, if the sector-wise CAGR, for an example, I am operating into rubber industry, something which I am making a rubber-related product, and the industry as a whole is making a CAGR of 24%, and my individual CAGR is 32%, that means I am doing good. So that is probably HSN code or something that I have to check. I can send this handbook to Equalify. You guys can take it. Otherwise, you can also download it. It's openly available in Google. But that is quite old. That those codes have not changed. That was published in 2008. So I don't know why there is not a new thing, because new industries have come up. Yeah, but when you search about NIC handbook, you get this handbook, which is quite old one. Okay. So that's what I was saying. that if the CAGR of the rubber industry is around 24% and my CAGR is 32%, or if the rubber industry overall is growing at the rate of 20% and I am growing at the rate of 25%, that means I am ahead of the industry and I'm doing good. And if the situation is reverse, for an example, I am into steel, steel industry, and I'm specifically making TMT bars, and the industry is going at the rate of, say, for an example, 15%, and my company is growing at the rate of 5%, that means I am lagging behind. So I have to buck up. Next is cash flow analysis. That is again a part of financial analysis. You will see the revenue stability, you'll see the working capital management, and what is the backup plan to withstand adverse economic conditions. Now, when I talk about adverse economic condition, there is a concept of mean reversal. So those who make more money will make less money later. Example, page industrial shock. So that's a concept what you are talking about economic cycles. So it's like, initially when you come up with a new product and somehow you are able to create high demand, you always make more money. And later on, it's like, when the curve comes down, you make less amount of money. Okay. Now the next one is debt structure and covenants. When I talk about debt structure and covenant, the structure of an entity's debt, including maturity profile, interest rate exposure, debt covenants is considered. Rating agencies assess the potential impact of debt repayment obligation and restrictions on financial flexibility. Now, can you give me a practical example where a debt repayment obligation and financial flexibility both are related? Give a practical example. Yeah. Banks giving moratorium during COVID, okay. My question was, how do you see repayment obligations and restrictions on financial flexibility? How a rating company will see and how these two are related? Give an example. So giving moratorium is one part. So this is the kind of RBI reworking on NPA or NPA days is something that is also, yeah, we can factor it into that. But how the company is managing? Becoming an NPA means it's an extreme thing. But how the company is managing? How do you see what are the management of the companies? That is a reactive approach, not a proactive approach. I'll show you one example in Excel, right? Screen is visible, right? Screen is visible. Excel is visible. Good. This is my entire financial year. From September to January, from September to January is my peak season, right? April and May is so-so. Sorry. February, March, April, May is so-so. These 3 months are my dull season. There can be a situation like this, right? There can be a situation like this or not. So what happens? I get my peak cash flow, say for an example, 1 lakh rupees. Just an example. Here, I get around 70,000 rupees in this period. And in this period, I get 30,000 rupees. This is my cash flow on an average. Trend from last 5 years cash flow, right? I have an EMI obligation of 80,000. Right? Can be a situation where I can have an EMI obligation of or debt obligation of 80,000. So you can see at times there is negative. I'm not able to serve it. Right? Is it an ideal situation? Is it a situation we should ideally look for? Is it a situation we should ideally look for? No, right? No. We cannot get into this kind of situation. Bankers will be behind my life. So what can be the solution? What can be the solution? Deferred payments. That will affect your credit score. That will affect your credit score. Right? What can I do? So one is I can create reserve. I can create reserve when my season is up, when I'm getting extra cash. Second is I can structure the loan in such a way that my EMI will be 50,000 at this point of time, or rather 60,000 at this point of time. It will be 25,000 at this point of time, and it will be 1,20,000 at this point of time. And again, it will be 60,000 at this point of time. Structured repayment schedule, possible? Yes, absolutely, Yashwant. Absolutely, it is called ballooning repayment. It is called ballooning repayment. In other words, it is called free format also. If you want to see in some next session, I can show you how to draw this kind of repayment. It's not through simple PMT formula you can do it. How do we find out error? You use PMT formula, right? Yashwant, we use PMT formula. But no, that is not going to help you in this case. Right? PMT formula is nothing like it's for calculating EM. Simple. You have to give rate, NPR, PV, and then you find out the EM. It's very simple. So this is how whether the company has kept this kind of planning or backup. There can be two things. One is planning based on my cash flow cycle for the entire year. Accordingly, I will keep my debt obligation. Second is I keep my backup. Right? So this is something which a credit rating company will observe. Last is country risk. Obviously, there can be economic, political stability, instability, which will be considered and factored into while giving a credit rating. Now, credit rating criterion is financial history or stability, credit worthiness, debt service coverage, credit history, industry and economic factors, external factors. So this is the overall credit rating process. Just quickly go through this, then I'm going to explain it to you all. So a rating request comes to the credit rating agency, right? A rating agreement happens. Either there is no agreement, then obviously without agreement, rating agency will not go ahead. They'll rethink and negotiate, and there will be again rating agreement. Once the rating agreement is done, then the analyst is allocated. So one particular analyst is being allocated with the task of underwriting the company. What he does, he takes information gathering. So at this stage only, at many point of time, so Bharat, when we talk about internal information, it means it could be the financials, it could be the queries in financials. Now you see certain items in financials where in notes it is not clear. You would like to deep dive and understand from their CFO or the finance guy that what it is all about. Coming to the next thing is if there is any change in accounting norms which is mentioned in the auditor's report, or they are themselves proactively disclosing to you. Third point is that whether they are planning to change anything in the management. Fourth point is like you can have a query that your order book might be 500 crores, but currently out of 5,000 crores, only 500 crores is remaining, which is going to get end in next 2 months. Then what exactly you are going to do for another 10 months? What about your cash flow planning? And at that point of time, if the concerned person from the company is not able to give you proper justification that yes, we have bid for n number of contracts and we are going to get, we have already got LOIs for this, I mean, a letter of intent for this, that we will have additional book value of say around 7,500 CR, which you will be able to see. I'll be getting the work order in next 2 to 3 days. Then that makes sense. That comes clarity. From there comes clarity. You get a clear picture that yeah, this is going to be the cash flow. Then probably there is something in the news about some legal case when you deep dive and ask the concerned guy, and he is not giving you proper feedback. That means a proper cooperation is not there. So these are the time when you get to see in a rating rational or rating report that no cooperation from the client. Does this answer your query? Does this answer your query? Okay. Now, information gathering, there could be two things. One is internal information, another is public information. So public information from Puro 42, from MCA, from previous rating. If you have not given that rating, probably last time some other rating company has given rating. So now this is also one important factor where a company keeps on changing rating companies, rating agencies frequently. That is not a good sign. That earlier I used to get me rated from CRISIL. Last year it was CRISIL. Last year it was CARE. This year it is ICRA. Doesn't give a good sign. Why I am changing my rating agencies so frequently, right? Next is information about the board or stakeholder interaction. I have not heard rating of a rating agency. Honestly speaking, not known to me, could be. Okay. So we can immediately check, Google it. Let me see. So I don't find. They are talking about ICRA's rating scale. Correct. Right. So, okay, let us quickly finish it up. We are left with only 11 minutes. Then the management, then they get the information and they analyze the information. Then it goes to management board or stakeholder interaction. Then there is an in-depth analysis and reporting, which goes to reporting committee. And then they give a decision where rating acceptance happens. So you give rating of BB to a company, which has to be accepted by the company. If the company accepts it, you issues a letter of acceptance. You get a letter of acceptance from the company and you publish the rating. Because once the rating is published, it goes to public. You cannot change it, right? If the company says that, no, we are not agreeing to the rating which you have get, they can always file an appeal to you. And once they do that, you can reconsider, and reconsideration can lead to improvement in rating, or you can stick to the old rating. So that is how the entire rating process operates. Sounds good? Is it good one? Is it a good thing? Okay, let's go ahead. Factors that affect the rating, credit rating of a company are financial performance. So if they don't agree, obviously that will not be published. Negotiation will go on. So the credit rating company is a measure of creditworthiness and is influenced by the various factors we already talked about it. Financial performance, of the company, debt and leverage, industry competitiveness, business diversification, whether a firm has diversified business or not. So what is the benefit of having a diversified business? That is, you can have multiple cash flows, but from multiple sources, multiple sectors, management quality and corporate governance, economic environment, legal and regulatory environment, and market perception and investor confidence. So those are the basic points. When I talk about internal credit rating system, refers to the system to analyze a borrower's repayment ability. So you are only considering the internal things. So under Basel II guidelines, banks are allowed to use their own estimated risk parameters for the purpose of calculating regulatory capital. So banks, they have a rating methodology they have a scorecard methodology, which gives you a score that yes, this is the score of this company. So that is an internal rating. External rating we talked about. These are typical rating scale and what does it mean? These are the rating scale and what does it mean? Different rating scales and what does it mean? AAA is the best and D is the worst. Yeah, Praveen, right. They are called non-investment grade, right? A basic difference between credit rating agency and credit information company. So when I talk about the parameter opinion, a credit rating agency opinion on future debt repayment capability in timely manner, whereas credit information company gives you the past data. Relevance to lender, credit rating agency for investment in instrument of institution and company, whereas it is credit information company is more relevant to the loans during borrowing. Under 4C model, it shows capacity to repay, and credit information company shows character to repay because it is the past data. Example of credit rating agencies are CRISIL, CARE, Moody's, Fitch, and example of credit information companies, CIBIL, Equifax, CRIP, Experian, right? Someone is asking something. So you will, you can see the scale. One sec. Triple B minus is comparatively better. Sorry, triple B is better than triple B minus. So this is a case study which I would like Equalify to send it to you. I just go through it. LNFS Group is a vast conglomerate with complex corporate structure that funds infrastructure projects across the world's fastest growing economy. The financier set up in 1987 and is listed. I'm sorry, it is ILFS. It's not LHS, it is ILFS. ILFS. Right? So the financier set up in 1987 and its listed subsidiaries has powered India's infrastructure boom, including Chenani Nasri Road Tunnel, India's longest, raised billions of dollars from the country's corporate debt market. In July, founder Ravi Sarthi stepped down, citing health reasons. In August, a default case within the group rattled India's money market, added to pressure on corporate bonds yield and sparked a sell-off in the stock market. The Reserve Bank of India has initiated a special audit given the potential systemic risk the group poses to other non-bank lenders and worries about $500 million of repayment obligations coming due over the next 6 months. The nation's credit industry, the credit rating industry has come under scrutiny After the firms that assets ILFS, including the local partner of Moody's Investor Service and Fitch Rating, failed to see the financial troubles brewing at the financer, the group's debt burden jumped to 44% in the year ended March 31st, 2015. Now, what went wrong? India's credit rating company's failure to foresee the great unraveling at ILFS has left Prime Minister Narendra Modi's top economic policymakers, including RBI Governor Urjit Patel and Finance Minister Arun Jaitley, facing contagion risk to the broader financial sector. There is definitely a clause for revisiting the rating standards for the whole rating framework. Rajiv Kumar, India's banking secretary, said in the interview, some kind of accountability needs to be there. Right? The burning question is now the credit analyst should see the financial recovery. It was no secret that funding cost of the company is set to 30%. Right. Now, what I want to do, I want this, you can take, I don't know what time you will be able to see these PPTs. You take snip for these 3 pages and make a critical analysis and submit it to me on the next weekend. Right? Quickly do it, and then we finish off. Take snip for this one, this page, next page, and the next to next page. Do a critical analysis of this case study with facts and figures, whatever is available. This one done. Okay, everyone done with this page? Done with this page? Now this page. Take a snip of this page. Done? Oh, I'm so sorry. Yeah, this one. Sorry. This one. Take a snip of this one and then the next one. Let me know once you are done. Okay. This one. What you guys can do, you can put these snips in the WhatsApp group as well. So anybody, if he or she has missed it, they can get it. Please put it in the WhatsApp group as well. And also you can do now, what you can do is your critical analysis, make it on a Word file and mention your name and registration number. You can send it to me through Equalify, and also you can put it in the WhatsApp group where I can download it and see your critical analysis. That is the other way out. That is slightly more faster. Rather than your analysis coming to me through Equalify, you can put it in the group. It will be slightly more faster. Okay, is it that only admins can put messages over there? Okay. So then you can so Yashwan, like, you know, whoever is not added, just ask Drishti to add. Then send it to Drishti by mail. Send it to Drishti by mail. She will send it to me. Okay. So that's all for today, guys. Just wanted to understand. Tanumai just sent write a mail to Drishti, she will add you. Okay. So need to find it out. Data on NBFCs means what kind of data you are looking at. You can have list of NBFCs. You can go online and check their financials. It is email ID is academy@equalify.org. So what you can do, I have to Google a bit that in a single page whether you can get that entire sector analysis or not. But obviously you can see a list of companies and do individual research. Say you pick up 10 companies and then do research for these 10 companies and you can get an idea. Okay. Chalo guys, thanks. Let's connect at 10:30. How was the session? How was this session? Did you like it? Thanks everyone. Thanks. Take care. Let's meet at 10:30. Bye.